Welcome back. Sooner or later, every business sells off an asset, like an old company car. But getting that asset off the books, well, it's not quite as simple as you'd think. Today, we are going to walk through the exact journal entries you need to get it done right. See, selling an asset is way more than just putting cash in the bank. You've got to follow a really specific set of steps to remove it from your records. If you get it wrong, your entire financial statement could be thrown completely out of whack. It's that important. Right. So for our case study, we've got Smith Associates. They bought a car a few years ago for $6,600, and that included GST. They just sold it for $3,300, also including GST. So our job is to nail the journal entries. Exactly. And before we even think about a journal entry, we have to apply the golden rule of asset accounting, and that is GST is not part of the asset's value. It's just a tax we're holding for the government. So for all of our calculations, we have to work with the ex-GST figures. Okay, got it. So for the cost price, I'm going to take the $6,600 and divide by 1.1. That gives us an ex-GST cost of $6,000. And for the sale price, it's $3,300 divided by 1.1, which is $3,000. Okay, so these are the two numbers we'll actually use for everything. Perfect. Now that we have our real figures sorted, we can follow this 5-step roadmap. It's the same every time. First, we'll update the depreciation. Then we'll clear the asset from the books, record the cash, and finally, figure out if we made a gain or a loss.
All right, let's dive into step 1, the depreciation catch-up. Now, the key here is to remember that we still owned the car for part of this financial year, so we absolutely have to account for the value it lost during that time before we can sell it.
Wait, why is that so important? I mean, we're selling it anyway. That is a great question. It all comes down to the matching principle. Think of it this way. The business got to use the car in July and August, right? So we have to match the expense of using it, which is the depreciation, to that same period. We can't just ignore it because we're about to sell it. So the crucial point is making this journal entry right before we do anything else. Now, based on the 20% straight-line rate on that $6,000 cost, 2 months of depreciation comes out to $200. So we debit depreciation expense and credit accumulated depreciation. Okay, now the books are up to date and we can proceed.
With depreciation all caught up, we can move on to steps 2 and 3, which I like to call cleaning the books. And to do this, we're going to use a special temporary account.
I want you to think of the disposal account as a temporary clearing house. That's it. Its only job is to gather up all the financial pieces that are related to this one sale. So the asset's cost, its total depreciation, and the cash we received. As soon as we're done, this account will have a zero balance. It's just a tool to get us to the end result. Okay, a clearinghouse. That makes sense. So for step 2, I need to get the car's original $6,000 cost out of the motor vehicle's asset account. So I'll credit motor vehicles for $6,000 and debit the disposal of motor vehicle account for that same amount. Excellent. Now for step 3, we do the exact same thing, but for the depreciation. Now, what's really interesting here is the calculation for the total accumulated depreciation over the car's entire life with the company. If you follow the math from purchase to sale, you'll see it comes to a grand total of $3,900. So we take that $3,900 figure and we transfer it. We debit the accumulated depreciation account to wipe it clean for this specific car, and we credit our disposal clearinghouse account. So now both the cost and the total depreciation have been moved into our little holding bay. The books are definitely getting cleaner. Step 4 should be the easy part, just recording the money we got for it. Exactly. We received $3,300 in total, so we debit cash at bank. But remember, that price included GST. So we have to credit GST collected for $300, and the actual sale value of $3,000 gets credited to our disposal account. And just like that, all the pieces are finally in one place. And that brings us to the grand finale, step 5. We've moved the cost, the total depreciation, and the sale proceeds all into our disposal account. So now we just balance it out to see if we actually made a gain or a loss. And a T account just illustrates this so perfectly. You can see it so clearly. On the debit side, we have the original cost of the asset, $6,000. On the credit side, we have the accumulated depreciation, that's the $3,900, plus the $3,000 from the sale. That gives us a total credit of $6,900. So the question is really, really simple at this point. Which side is bigger?
the debits or the credits?
Well, looking at the T account, the credit side is clearly bigger. It's 6,900 versus 6,000. And the rule says if the credit side is greater than the debit side, a gain on disposal has occurred. Hey, we actually made a gain.
You got it. The difference between the credit side and the debit side is literally our outcome. A simple bit of subtraction shows we have a $900 gain on this disposal.
And our very last journal entry just records that fact. To make the disposal account balance to zero, we need a $900 debit, right? We then credit a new account, gain on disposal, for $900. Our clearinghouse is now empty, and the gain is officially on the record. So what happens to that gain on disposal account? It doesn't just sit there forever. It has one final job to do at the end of the year. Of course, a gain is basically like revenue, isn't it? So at the end of the financial year, it gets closed off to the profit or loss summary account, and that ultimately boosts the business's net profit for the year. Precisely. So that's the whole process for a gain. But here's a little challenge for you and for everyone listening. What if we had sold the car for a loss? Which side of that T account would be bigger then? And how would that very last journal entry have to look different? Think it through. That's how you really start to master this stuff.